afternoon and welcome to Stock Market Today. We're live from Los Angeles in our newsroom. It's Alyssa Corum and Ed Carson here. On today's show, we're going to be breaking down 3 stocks that should be on your watch list for when market conditions improve. We're taking a look at Walmart, Domino's Pizza, and TAL Education. But first, we need to analyze those major indexes. Sharp losses across the board today. Historic losses. The NASDAQ finishing down about 7.3% below that 8,000 level. The Dow down almost 8%. The S&P 500 down over 7.5% as well. Small caps getting hit particularly hard, down almost 9% for the day. I mean, what should investors be thinking about right now, Ed?
Should be hopefully in cash, especially thinking that you're dry right now. You don't want to be outside right now in this kind of bad environment. The S&P hit a 9-month low. Dow hit a 14-month low. NASDAQ went through the 200-day line and closed below it. Went through intraday lows. The stock market rally attempt is dead, in case anybody was confused about that. Correction and new lows. This is just, it's been very violent, very sharp down. Coronavirus cases continue to swell. Italy in particular, U.S. is seeing a big increase, and part of that's because of increased testing, but that's something we don't know. Will Europe and the U.S. really come under that? Oil prices down more than 20%, just amazing plunges after falling so much last week. A lot of things going on. You have to start worrying about, is there going to be a global recession? And once that happens, it's hard to get the engine back up. So just stay on the sidelines. That's what it comes down to it.
Yeah, there's a reason why we closely track market technicals in the way that we do, using history as our guide. Spotting that selling early on and the change in tone. So yes, hopefully you are on the sidelines now and getting prepared for when eventually we will see a new uptrend.
Yeah, when there is a new uptrend, then you want to be ready for it because you have that situation. But you don't want to get in early. You don't want to get in early because we had a potential rally last week and then, well, we don't have it anymore.
Right, we need to wait for actual confirmations of sustained upward momentum. But until then, we are keeping an eye on stocks with strong relative strength lines. Let's start off with a look at Walmart today. Our stock of the day, as you can see that blue line on the chart, just spiking higher here. The relative strength line, of course, measuring price performance versus the S&P 500. So we want to be keeping an eye on stocks that are showing strength amid the widespread losses that we're seeing.
Yeah, and Walmart's getting the benefit of some coronavirus stockpiling. You saw that with Costco, which performed relatively well. It's holding above its 50-day and 200-day line after falling below it about a week and a half ago. The downside is this doesn't have great fundamentals. I mean, it seems like the management's doing everything they can, but it's still earnings are sort of flat. It's just a tough retail environment in general. And so the question is, even though, yes, it has a high RS line, and that often tells you which will be the leaders in the next uptrend, it could be this is a defensive play, and the moment the market turns around, everybody's jumping into higher flying tech companies, and Walmart would flatten out. We don't know. I mean, maybe it will, but that would be something to keep in mind.
Right, and I think it says a lot that even though Walmart closed about flat for the day, to see that RS line spiking in the way it has, especially with a sharp takeout of the 105 level. So we're keeping an eye on that 200-day line for Walmart. But let's also take a look at Domino's Pizza, because we've also been keeping an eye on that name after that earnings gap that we saw not too long ago. We've seen it pull back now to the top of that 5% buy zone almost here, Ed, but it was able to come off of lows for the day.
Yeah, and I don't know if it hit, closed higher, but it closed well off the lows, really outperformed the market, and a lot of restaurant stocks were hit very hard. So it's not just all the restaurants are doing great. So the relative strength line, which had dipped a little bit back to new highs, even though the stock is well off highs. Again, this is not something you buy now. The market's terrible. This doesn't really have a buy point. You'd like to see this consolidate, maybe form a new buy point, form a new base, form the buy point, and when the market turns, maybe this will be an early one to break out. We don't know. Maybe in a week or two, everybody says, no, pizza sales are plunging and so, this tanks. But you keep this on your watch list right now.
Yeah, we'll see if a new base is forming. But also, let's take a look at TAL Education, ticker TAL. This is an education name out of China that we've been seeing hold up really well, and once again finding support at the 50-day line today.
Yeah, 50-day line, the RS line is hitting new highs or right out there. It's been consolidating for a few weeks, so this could be something that forms a new base in a while. I mean, TAL Education, New Oriental Education, which is EDU, GSX Tech EDU. These are some names, and then Chinese Internets. There's a lot of Chinese stocks that really should be in a watch list because the coronavirus cases seem to be falling there. So maybe there's some signs that this is actually where you might see the first real breakouts when the market turns. You think, well, China, how can that be? But that's actually they've had the first problem, but they might be the first out.
Yeah, and once again, now is not the time to let the fear control you to a point where you're not keeping tabs on your watch list, because the truth is some of the biggest gains are made at the beginning of a new market rally, and you definitely don't want to miss out on that.
Yeah, it's sort of like it's not like a DVR. If you're not paying attention to the market, you're like, oh, wait a second, 4 weeks later, you finally pay attention again, and the market may have already blown out. Some of the big winners may already be out. And so you just need to stay engaged, keep paying attention to how the market is doing and build those watch lists. And that's where you're going to be profit when we have that new uptrend, which could come in a week, it could come in a month, but you want to be ready.
Yeah, and one great way to stay engaged, in addition to this show every day, of course, is by tuning into IBD Live every morning. It's our daily live stream going in depth into what you need to know in the market, starting 10 minutes before the opening bell, running through the first hour of trade, really getting into the nitty-gritty expert advice of, again, what you should be paying attention to right now.
Yes, I think it's just great education. When I'm on, I'm paying attention to what everybody else is saying. There's some really great insight there.
Yeah, you offer some great insights as well too, Ed. And also, we do have a webinar coming up, more insights on the Nailed It, Failed It webinar. You can check that out at investors.com/webinar coming up on March 10th at 11:30 a.m. Pacific. All right, that's it for today, and we'll see you right back here tomorrow.